First of all, I want to thank the Revenue-Based Finance Coalition. This video podcast is sponsored by them. So if you're not familiar with the RBFC, they are a coalition, a group of responsible finance companies who provide needed capital to small, medium-sized businesses through innovative, non-traditional methods. They include brokers, funders, other vendors that provide technology and operations for the industry, the revenue-based finance industry, of course. With that, let me just say that, Andrew Mallinger is the COO of PIRS Capital. He's been in the RBF or the MCA industry since 2010 with a few different companies, but with PIRS Capital since 2015, which they're now one of the top funders by volume in the revenue-based finance industry. So, Andrew, I appreciate you joining me and welcome.
Thanks for having me. It's a real pleasure.
Yeah, definitely. So, let's kind of jump into it. Give me, another little quick tidbit on your background, and then where you feel like the industry, the revenue-based finance industry / MCA, as many people know it, is right now.
Absolutely. So, I kind of hopped right out of college. I went to Penn State University, tripped and fell into the industry, and started off in sales at what was Paramount Merchant Funding, now known as Fora Financial. So before they grew to one of the larger players in the space and had a successful exit to a PE firm, I was there helping to build sales and the wholesale channel and the lender. And we had a lot of fun doing that. Went from like the 5th employee to, by the time I left, there was over 150 people. So that was a fun journey. Had met PIRS Capital along the way. We decided to come to an agreement in 2015 to start a new journey there. They needed some help building a lending business. We basically started from zero, from scratch, helped build all of that up on the lending side, collections, technology, assisted in sales, really touched as many points as I could here at PIRS. Now we've raised a ton of capital. We're in a great spot in terms of our growth. Defaults are where we want them to be, and we've really built something that we're pretty proud of. So, I've seen a lot in since 2010 when I entered the business, and through the growth of two companies really from the beginnings. I've learned and seen a lot as well through that.
And we'll get to a few of those stories definitely along the way here. So, I touched on a little bit, kind of referred to MCA, merchant cash advance, and now it's really evolved to revenue-based financing, and there's really, some niche products out there. But, tell me a little bit about the importance, of RBF to the overall economy and how it affects, small businesses.
It's huge. It can't be overstated because small businesses, really the micro lending small business space, which is kind of how we're viewed. Really guys doing 200 million in revenue and under are really the underbelly of the economy. I think it results in a decent amount, over half of the jobs created in the country. I don't know the exact number. And they're really, a lot of these small businesses are extremely underserved. And now with banking turning into what it is and kind of consolidating into 4 or 5 super banks, and these banks now de-risking and really looking at their balance sheets and saying, we don't want anything to do with riskier type assets, these small businesses are once again getting left behind. And, looking during COVID, when these businesses could look toward the government to provide them capital, that's no longer the case either. So now you have a subsect of the population that contributes to over half of the job creation and however much economic growth, and they have nowhere really to go for financing, or wherever they go, they're being heavily restricted, and any working capital needs that they have, they can't find. You can only tap friends and family for so long. debt is needed to grow, and it's an important tool for a lot of small businesses. And to be underserved by the debt markets um, is, I think, why the revenue-based finance industry has grown by such leaps and bounds over the years. And even despite the best efforts of regulators and politicians to slow it down or stunt its growth, they really haven't been able to do anything because of its importance.
Right. And so that leads us into a little bit more of, kind of where things are going. Short term, a little bit longer term. What are your thoughts given some of the regulations in certain states and then just how it's affecting what you guys do?
Definitely. So I'm sure everybody is aware of the disclosures and a lot of states coming in and kind of trying to put their imprint on the industry, especially California and New York, who a lot of states rely on for their laws and compliance and regulations. I don't think that this is all bad. I think that if you approach it the right way and understand it the right way, and with organizations such as the RFBC or RBFC, working with the legislators to better understand what these disclosures and regulations look like, I think it's a good thing. I mean, you're only going to see more institutions pouring money into a better regulated industry, as well as a lot of the bad players and people trying to take advantage of loopholes. They'll be forced out as there's less loopholes to jump through. So in the short term, I think that these kind of regulations and once again banks tightening and de-risking and consolidating, it's only going to fuel the fire of this industry, and demand is going to jump by leaps and bounds. So originators and lenders the same are going to see a lot more paper and a lot more interest in the product. I think over the long term, you're just going to see more of the same. I mean, we hope that we can all work together and have coalitions and organizations that can make the regulations smoother and more make sense, which will only help the industry and bring a little bit more normalcy, I guess you could say, to the industry and make it more mainstream in financing. And then once that happens and it's really kind of on par with any other lending institution, you're gonna see this industry continue to grow and really bring a ton of institutional money into the space, which will then be used by lenders such as myself to go out and service these small businesses who do have a major need for this capital.
And touching on the institutional capital, is there anything you can share, kind of from that perspective of, conversations with institutions, banks, whoever it may be, that kind of weren't familiar with it and now they are more familiar, or they're looking to inject capital into companies like yours, or anything you can share in regards to that?
Yeah, we talk to them all the time, and whether we know it or not, a lot of, everybody is aware of the industry. Everybody's aware of a lot of the large players in the industry, from small community banks to hedge funds to private equity. I think that the deal volume and the transaction volume has gone down since the early days as people were kind of testing the waters within the industry. However, that's not to be said that there's not a huge demand for institutions to get in with the right people. So if you are a lender, you're looking to raise dollars, I encourage you to get out there and at least understand what it's going to take, right? You're not going to be able to go to an institution. You're not going to be able to go and raise large dollars or competitively priced dollars if you don't have a backbone in place, good accounting systems, good technology, uh, you know, good backups for any of your banking that you're doing, good banking relationships in general with your payments providers. You do need all of that. So the days of working off spreadsheets and kind of just patching things together in this industry are gone. You do have to have technology. You do have to have systems in place. We learned a lot of that as we grew. And these are the questions that are asked. Nobody is going to lend you money as a lender or as an originator if you don't have solid systems, solid reporting, and ways that you can communicate your performance to them on a monthly, quarterly, or annual basis.
That's great info right there. I think that that could help out a lot of folks. I see some folks on the call on the Zoom that have raised some capital in recent years. And actually to kind of transition is actually perfect. I remember at the Funders Forum, I think it was not this I think it was 2022, met I think it was a private equity or a hedge fund guy at the Funders Forum. So let's talk about a little bit about Funders Forum, but actually revenue-based finance coalition first, and then the Funders Forum. What is your kind of role, and how do you see it helping the industry from your point of view?
So they've been on my radar for a while. Obviously, there's a bunch of different organizations out there advocating for the space, everybody with like a little bit of their own twist. Um, I was approached to partner with the RBFC for the most recent golf event that we had in January, which was a huge success, had a huge turnout, a lot of interest, not only in the space, but these gatherings of the minds and being around like-minded people who want to see the industry take a step forward. So after getting comfortable with Deveron and Scott and everybody who was involved in the industry, I really see the value that they're bringing. Once again, I go back to regulations are here, right? Like regulations are coming even more in more states. You have kind of fringe politicians that don't understand the space or think they understand it and are trying to put new restrictions or write new laws around what we do. And the only way that we're going to be able to, and I don't want to say combat that, but the only way that we're going to be able to work with the government and the legislators in the states is by having a coalition that understands what can be done and what should be done. Because there's a big difference. You do have to meet in the middle on a lot of issues. You have to understand what the legislators are seeing and hearing, because it's not all, you know, roses and rainbows in terms of we gave a company X and they grew because of that. There are people that feel that they've been taken advantage of or they've had a bad experience. And we need to understand why that is, what happened, and how do we get better as an industry. And having an organization that can take all of that and relay it to a politician, to finance committees within the government, this is extremely important because if they don't understand the value that we're bringing to small businesses, then they're gonna come up and dream up their own version of what should be done. And that's I think that's a dangerous place to be. So we do need advocates who live in the world of revenue-based financing and understand the challenges that we see and understand the good and the bad.
Well said. And yeah, I think that that was kind of, I don't know, but lost on me. But at the beginning, it certainly wasn't something I was clear on, and how little some of the regulators and politicians knew, other officials knew about the product. But it makes sense they can't really cover every single industry and niche and within it all the time. So Funders Forum, Broker Expo next month, March 5th through 7th. You're going to be there, correct?
Absolutely.
And it's a good forum to go to because why?
Like I said, just meeting like-minded people, just being in a room with people that want to move the industry forward, figuring out how to do that. That there's nothing more important. I've been going to conferences my entire career throughout the industries, factoring, equipment leasing, MCA, revenue-based specific, turnaround management, you name it, ABL, asset-based lending. And there's a huge value in putting a ton of people in the same room and helping people either understand what they don't know or getting from them knowledge that you don't know. I always like to pick up 5 or 6 really important things from each of these conferences. Funders Forum is the largest one in our industry. They bring people from all different walks, from the Amazons to investment bankers to PE to VC, and just hearing opinions of somebody that you might not talk to in your day to day could change your viewpoint of how you want to be doing business and how you should approach the business. I know a lot of originators and ISOs who go to conferences and understand now the lending perspective, and that makes them better at working with their lending partners. lenders who go to these things can meet capital providers, but can also meet their originators as well to deepen those relationships. So, Funders Forum is doing the right thing. They're growing it. They're bringing in outside voices so that it's not just an echo chamber within the space. And that's extremely valuable. It's something that everybody needs to do at least once a year.
And so with the kind of the regulation that's come out of everything, any keys to success for brokers, for some people that may be your partners, or I mean obviously even other funders, but like things are moving, innovating, and different software, whatever it is, coming on online seemingly every week. So what are your takes there?
Have good technology, understand how to use that to keep everything in front of you. You need to maximize what you're working on, from leads to approvals to lender relationships. And the only way to do that is through technology these days, whether that's a HubSpot or a Salesforce. That's extremely important. And really just going back to the basics and just do the right thing. It sounds so simple and kind of cliche, but all of the originators, all of the ISOs that I know in the space and have known since almost day one are people that I trust, that I know are doing the right things, have gone through the ups and the downs of the industry, and have maintained their integrity. And those are always the people that are going to be around for longer than somebody who's here to make a quick buck, who does something that works for 6 months, but is kind of on the fringe of not being right, burning lender relationships, burning customer relationships. It never works out well. I can tell you that from firsthand experience in seeing good, bad, and ugly. It never works out well. You could make a ton of money in 1 year by doing the wrong thing, and you'll never make another dollar. This is a space that is tight knit. Everybody knows everybody for the most part. The bad eggs, get cracked very quickly. So beyond some of the specifics of how to market, how to fund, how to sell, I rely on my sales partners to know how to do that better than me. But what I tell them is, you need to do the right thing. You need to treat your lender relationships seriously. You need to treat your merchant relationships seriously, because it will come back around and will make your life harder down the road if you get a BBB complaint or a bad Trustpilot review or a bad Google review. Those are things that you don't know hurt you, but as you're marketing and they Google your business name, can and will prevent you from making money.
Yeah, it's kind of one of the unknown metrics, right? It's tough to know that you missed out on a
You'll
client.
never speak to somebody who doesn't want to call you because of a 1-star Google review.
Exactly. Yeah, you could have like a bounce rate on your website or something. You're like, oh, why does someone land on it and then they leave, or whatever? And it could be, well, there's social media platforms that they find information on you, whatever the case is. And that to your point is people that are looking for the short-term success, short-term dollar, not the longer-term success in mind, their reputation, protecting their brand, or building a brand, for that matter. Generative AI, we didn't touch on that yet. I mean, you may not have things in place now, but what are your thoughts and any plans for using generative AI?
This is the buzzword. This is the
Yeah.
hot thing. Everybody sees it on Wall Street, and these companies going crazy, and ChatGPT and Google. Look, I would say as a lender, we're still exploring ways to use it. There's definitely places that we can put generative AI into place. But what I would say is, on the origination and ISO and marketing side of things,
Mhm.
even marketing as a lender, you have to be using this, right? With all of the tools that are out there, the HubSpots and the email marketing tools, and Google cycling through domains and all of that, it's become very hard to maintain a good email list or a good email domain without running into issues. So you do need to be using generative AI to refresh your content and continue sending out new versions of your marketing. And really the only way to do that now, and the cheapest way to do that, is using AI tools to do that. So, there's a ton of stuff out there. I would encourage everybody to do their research and look into it and make sure that they understand what this means in terms of their marketing. But your content, your copy that goes out through your email marketing platforms, you have to be using this generative AI to keep it fresh and keep it relevant and keep it from getting blocked through some Google email filter or whatever is going on now that's hard to kind of like predict. Um,
Yeah.
that's where I see it making the most impact right now in terms of the space.
And yeah, there's so many tools. I think when I do a search, there's just, a dozen more every day almost. Um, so for kind of either newer brokers or brokers that you see that, you know, maybe don't take some of the advice that you gave, or that's not in their mindset, like they just work a certain way. It kind of bogs down certain things that you might do as a lender, as a funder, in your underwriting, in your deal flow. What would you say to those folks?
Use technology
Yeah.
because it's not as much bogging me down.
Hmm.
It's bogging your systems down and it's making you less efficient. You're more worried about fitting a square peg into a round hole in finding the right approval for a deal than finding the next deal. So if you are able to utilize your technology and understand the credit value of your leads coming in and your applications coming in and working with specific or the right lenders to find the best approval, you're going to be faster, you're going to be more efficient, you're going to be better received by the customer than somebody who's not using this technology. So once again, I can look at as many apps that are thrown at me a day, and I can decision things very quickly. So it's not as much as me being bogged down as it is as much of, hey, I have a deal that I know, or at least I think fits Piers's box, and here's why. And if it gets declined, now let's have a conversation about why they thought it fit the box. There's a lot of value in that
Hmm.
and making sure that you're working efficiently and you're understanding what your lenders want. Because if you understand my strike zone, I'm going to work to get you an offer that can't be beat in the marketplace. And the faster that we can get that done, the less risk you have for a customer shopping or thinking that you don't know what you're doing. If they tell you everything you need to know up front and provide you bank statements and you can understand those and then match them up with a lender quickly, you're going to be the hero. You're going to be the person that seems to be the most informed and the most educated out of everybody else that they might be talking to. Anybody can kind of slam paper out there, get offers, and kind of throw them at customers. But not a lot of people can find the best offer that makes the most sense, present it to a customer in a way that they understand. And now you have a customer that trusts you and believes in you. And that's somebody who's going to work with you for a long, long time.
And that goes, so kind of your point is not to shotgun your deal to 20 different funders. Look at the deal, analyze it, do some sort of legwork on it, pre-underwriting, if you will. Get it to you guys because you're going to trust that broker more because they're working for that client, to working for you to save everyone time, getting you the right deals to a certain percentage of the time, right? Um, and do you find that more and more brokers on their end are kind of using whether it be an Excel spreadsheet or some other software built into their CRM for like a lender filtration system?
Without a doubt. Yeah, that's become pretty commonplace now in the space. And
You guys have
it
API hookup or
of course, of
yeah,
course.
okay.
Yeah, no, we leverage our technology and we encourage all of our originating partners to do the same.
Mhm.
And what has been happening is it takes a while. You don't just build lending matrices overnight. You don't just create lender relationships overnight. So these things take time. But I can tell you that over a year, 2 years, once you master the lender matrix and understanding and really deepening ties with certain lenders, your efficiency and your ability to get things done is going to increase, twofold. And your ability to have a conversation with your lender and get a deal done over somebody that doesn't invest the time into that, it's not even comparable. So people that can call us and say, hey, this deal should be up your alley. Here's the story. Here's what's going on. Here's the need, are going to be much more likely to win a deal or get a deal done with us than somebody who's just throwing paper out and saying, okay, out of the 5 or 6 lenders I sent it to, here's the best offer. Let me send it to the merchant.
Right. What can you tell us about the API process for you guys? How long it takes for a broker to kind of get that set up and working?
It shouldn't take more than 24 hours if you have a good developer. At this point, we have a good API guide. It's tried and tested. All you're doing is matching up fields, making sure you understand what fields are taken from your system and which ones are matching up to ours. Obviously, that's how the API works. But we've invested a lot of time into making sure it's as simple as possible. We also have a support team that can hop in and troubleshoot any issues that are happening as well. At this point, the API technology has become relatively simple and normal. So we've been able to kind of open source our portal where we can connect to any system. And we try to do that as easily and as simply as possible because everybody's kind of looking at the same data points at this point. Everybody's pooling the same things on an application. It's pretty much standardized now, which is great for everybody because you're pooling the same information as everybody else. That can be translated over to us relatively quickly, and then we can do our underwriting homework based off of that.
And are there any kind of I don't know about unique data points, but data points that you guys emphasize more specifically than maybe others out there for a file that a broker may pay more attention to when submitting to you guys?
Having the industry correct, that's a huge one. Typically there's a box on an application. The merchant can write something general. The more specific the industry, the better that we can understand and really get a touch and feel for what this customer does and is looking for, and if it hits our box. Additionally, understanding who the merchant is and what other entities they might be connected to. Just because a merchant sends you an application for one entity, you might be missing out on 3 other entities that they'll be shopping around for capital outside of you. So understanding that, and also saving you time. If the merchant has other entities that are currently leveraged or have defaulted on somebody else, we're going to find that. But the faster you know and understand that is the faster that you can move on from a file as well. So I've seen it work both ways: is time management or doubling or tripling the funding amount that you can bring to a customer based off of the need on multiple entities rather than just one that you're focused on.
And what about like kind of notes of the story of the merchant? Is it best to include a good amount of notes? What they're using the money for and all that in the email or API, however they're sending it to you?
It doesn't hurt. It definitely doesn't hurt.
Yeah.
Some deals are relatively straightforward. Some of them have more of a story. We always like to understand, and it really does smooth out the process, understanding what the need is and for how much. We like to tailor the offers to what the merchant needs. We also like to understand that if someone's looking for some amount of money that is impossible or would over leverage the client, that we can decision that quickly. And as an originator, you should be able to understand this customer does X amount per month and is looking for triple the amount of revenue. That's probably not going to happen. So setting those expectations and really understanding where the merchant should be when they're looking for financing, the faster you know that, the better.
And so kind of getting towards some of the last part of our topics, and then we'll get to questions, guys. If you have any questions you want to drop in the comments into the chat right now, feel free to do so, and then we'll get to them in a minute. But I know you've been in the industry for a while. You have some war stories. Can you tie that into, some things that we've kind of alluded to or talked about already, whether it be onboarding new brokers and the stories that may have happened in the past or some deal stories or anything like that?
Yeah, I think the craziest things that I've ever seen, and it kind of just goes back to understanding your lending partners and who you're working with. Obviously everybody knows that in any industry there's bad actors, and we can kind of leave that aside. Really, the craziest things that I've seen have come from entrants to the space that didn't know what they were doing. Right. So instead of maliciously doing bad things, people that come in and just kind of spray capital around and are approving things and funding things that everybody knows doesn't make sense. Those are the harder times for everybody, right? Because if you're competing against that as an originator, there's nothing really you can do, and that doesn't make sense. And as a lender, we have to go through those cycles as well. So, it's always funny to me when we approve something for um, a capped out amount of money that's like 100% of somebody's revenue, and another company that just came into the space is giving them 3x that amount. You just kind of look at these things and you say, this literally can't make sense. What am I missing? Until you realize you're not missing anything. And look, those people come and go, and they've flamed out, and it's unfortunate that they couldn't figure it out. But those are just kind of the wilder times in terms of seeing companies do that and come in. And to kind of tie it back, if you don't have solid lending partners that you understand what they're looking for and what they're doing, I've seen originators who have loaded up a ton of deals and a ton of merchants with kind of the hot lender, just because they are doing things that don't make sense and are kind of out of the box. And when they go away, you have a book of merchants that now need to be brought down to reality, and they need to be, properly educated on what is a deal that actually makes sense. So, there's a lot of lessons to be learned there. Is you can't just chase the dollars, and you can't just chase the hot product out in the market. You have to understand if it works. You have to understand if it's going to be around. Because if it's not, you could put a really large portion of your book at risk of not being able to come back and renew.
Like with the kind of the percentages of your gross pull, however, there's different terms for it, but basically the amount of pull percentage per month for merchants. I mean, it varies per industry, right? But what's kind of the highest you would go, or what's some of those horror stories that you're talking about that you see people going too high, other funders out there pulling 30, 40% of their monthly, revenue.
I've seen it. Yeah, I've literally seen files, unfortunately. And to preface, not so much anymore, because the industry has kind of self-regulated and figured out what's good and what's bad. And that's the name of the game. That's the goal here, right? And it's happened across the mortgage industry, obviously, the auto lending industry. We're not alone in being an industry that had to kind of self figure out how to underwrite and how to do things. So that's a preface to make that this isn't just specific to us. But yeah, I've had files come across my desk where there's lenders taking literally 50% of a customer's revenues as debt. And that's just completely unsustainable. The highest we're going to look to go is probably 12 or 14%, depending on the margins and what type of industry it is and the cash flow. So we'll look to be around there. But what we won't do is go above and beyond what our history tells us and what our models tell us, just to win a deal. And if that means losing business, we're totally fine with that. But yeah, I mean, I've seen some incredibly over leveraged businesses, and like I said, it's something we want the industry to completely get away from, and it is. But these are things that happen and pop up.
Yeah, and you go down all the different maximum positions, and that's basically when you run into that even higher than 50%. I would imagine in some cases. But it almost ties into a question that we can start taking now from Rodrigo Freitas. He asks, I don't know if you can see the chat box, how often do you review your underwriting box? Also, what do you look for in that review?
So that's a great question. I think any good lender should be reviewing their underwriting box on a monthly basis. And that's a look back, right? Obviously, in February, we're not looking at our January funded deals and trying to learn lessons. But every month when we kind of sit down and review financials and performance and vintages of deals funded over the past year, we look for trends. We look for industry trends, we look for cash flow trends, we look at economic trends. So it's something we do. That's not to say that we're making any huge changes or that we're doing anything drastic as far as you know changing the way we underwrite or model. But it is something that we're very, very much on top of, especially when economic times are a little more uncertain, like over the last year. And I think into this year, you're going to see it as well. Not to say that anything bad is happening in the economy right now, but you have to kind of stay in tune when there's a lot of noise in terms of rates and different debt issues in the economy as a whole.
Sure. Yep. And he also asks, do you price tailored to each deal, or do you have ranges of pricing based on the underwriting box?
We price in ranges. We have tiers. We have credit tiers. However, we do also tailor pricing to specific deals based off of the need. Once again, going back to relationships and having these lender relationships, we can be flexible if we understand the need and understand the customer and have that relationship with our originator, then we can tailor pricing specifically to a customer, including prepayments, including overall pricing, including you know anything we need to do to make a deal happen.
Okay. Yeah, so everyone definitely either drop a question in chat or kind of raise your hand or speak up. You can unmute if you have a question. I'll look for you. Um, in the meantime, I'll ask Andrew, what other tidbits can you give about yourself, just even personally? You're based in Miami, correct?
Yes,
All
yes.
right.
We moved everything down from New York. We were a New York-based company from 2015. We moved everything down to Miami and down to Florida, like a lot of companies did 3 years ago. Definitely enjoying that. It's different than New York. It's not as hustle bustle, but that's okay, I think.
Yeah.
At some point, you kind of have to move away from that, or not. People still thrive and love it, which is great.
Sure.
But yeah, we're a Florida-based company now.
Good deal. And if someone does want to get on board with Pierce, how do they do that?
They can visit our website. We have a partner form to fill out. We'll also get in touch with everybody through Funder Intel and through the Funders Forum and the RBFC. We're looking forward to meeting all the members and getting in touch with everybody on this call and not and on the registration lists for the Funders Forum.
Mhm.
We want to meet and talk to everybody. We're here to help. We're like I said, we're a very hands-on lender. We're not just a submit it and forget it. We like to talk about deals. We like to help people understand what we do. And from there, we found a lot of success in getting things done with our partners.
Perfect. I dropped your website in the chat. Everyone, you can look in there. I also put in the chat the RBFC's website as well as the Funders Forum Broker Expo. Again, that's coming up March 5th. So if you haven't already registered, definitely do that as soon as possible. I'll be there, Andrew, and a bunch of other people on this call. See Leslie, thank you for joining. I see a bunch of other people that I know. Anyone else have any questions? I see Gary that just joined Funder Intel. Thank you, Gary. We had a good conversation the other day, so hopefully you got something out of this. And
Thank you as
then,
well.
yeah, yep, absolutely. Andrew, is there anything else that you want to add?
No, I think the industry is headed in the right direction. I think demand is increasing. I think this is going to be a really good year for the industry as a whole.
Mhm.
So if you're in the industry, if you're interested in being in the industry, I think now's a better time than ever. Like I said, the current climate of banking and institutional funding and government lending has never been tighter. So that leaves a huge opportunity gap for the underserved small businesses that we talk to and service on a daily basis. So if you have that understanding and you know how to have those conversations with small businesses, you're gonna be able to help out a ton of them. Lenders these days are well capitalized. We're motivated to get things done. And like I said, we have organizations that are working with legislators, that are working with regulators that are trying to come together with make sense regulation, which will make this product an even easier conversation to have with anybody that you come across. So I would say that you're in the right place, even if you're cross selling equipment or asset based or whatever you're doing out there. You should have working capital, revenue based financing in your repertoire. I think it's super important. There's a need. I see huge companies. I see companies that everybody would be familiar with, household names. And these are people that are looking for working capital, even with banking relationships, equipment leasing relationships. We see it all. Our average credit score is very high, 700 plus. So we're not looking at subprime borrowers. We're looking at bankable customers that are looking for the last piece of financing in their capital stack. So you do need to understand that. These are things that you can learn by going to conferences, by being on calls like this and having conversations with your lending partners.
Great point about the capital stack and being part of it with what you guys offer and many others that are kind of the top tiers of a revenue-based financing product because there's so many good business owners that it's the opportunity cost, right? So it's not just that they can get a bank loan and they're going to go that way. They don't have the time. They have, there's certain things that a revenue-based financing product is just going to make more sense or be kind of the only option, but they're still got 750 credit, still got healthy bank balances and a good industry and so forth and so on. And that's why you see, to your point is the regulation and so forth are giving it more credibility. You have the bigger fintechs that offer these products. Most often the bigger ones that have a lower cost of capital, but it gives the reputation it elevates the reputation, gives it more credibility, and that's where I agree 100%. There's only growth there, and it's certain situations that business owners, this is the product that they're going to need and use more often than an SBA loan or some real estate backed loan or something that takes 6 to 8 weeks or more. So.
Definitely. Definitely.
I'll get another question from William Lavovic. Hopefully I pronounced that right. How different is RBFC compared to the SBFA or SBFA, I think it is Small Business Finance Association. I'm not sure if were a part ever, if you have any
No,
comments on that.
we were never part of. We have friends that are in the association and in the lenders that are a part of it. I think that um, each organization is going to see things a little differently as it comes to how regulations and kind of industry standards should be put into place. It's not a bad thing. I think that differing opinions is helpful as long as we have advocates that are pushing towards solutions and working towards solutions with the regulators. That's the most important thing. So the SBFA is doing great things. It might not be fully in line with the RBFC in terms of how they see certain regulations or disclosures or what have you. But like I said, that doesn't mean it's wrong. It only means that they're advocating the way that they see it. And like I said, the more advocates that are advocating the right things, the better for the industry in general.
Eric asks, what are your thoughts on lending to e-commerce businesses?
Look, e-commerce has taken over kind of the traditional brick and mortar. It's the future of any retail business. If you're brick and mortar, you have to have e-commerce. If you're e-commerce, you don't necessarily need to have brick and mortar. We've figured out how to lend to those businesses. So anybody that sees them, we can lend a helping hand in figuring out how to lend to them specifically. We understand their inventory needs, and they have different ways of working and different needs than a traditional retail vendor. They turn things around a little bit faster. They have faster capital needs. We've done a ton of business with some huge e-commerce names. We also offer resources to them in terms of we have technology partners that can work with e-commerce and help them increase their bottom line and top line as well. So e-commerce has been something that we've really focused in on.
Perfect. And another question comes in from Hayden. How are you viewing applications with existing stacked with existing positions? Are these becoming increasingly declined?
I would say that that's a case by case. Obviously, excessive stacking and stacking with certain lenders, we look at a little less favorably than if somebody has a position where maybe they could be approved for more money and the lender just capped them on dollar. We're happy to work with these customers and buy out their current position and just increase their availability and working capital. Lenders have all certain caps in place and different underwriting standards. So we might look at something a little differently than another lender. Um, Obviously, once again, these are all case by case scenarios. Malicious stacking, we don't love. We want to make sure that the customer is in a comfortable place when coming to us. And if we can help them kind of get over the hump in terms of getting them more money or kind of filling the gaps that weren't filled by the other lender, we're happy to look at. But we've also seen some kind of horrid stacking situations and some bad situations that customers have got themselves into. And, we're not going to get ourselves involved in any of those situations.
And that brings a question to mind about kind of how do you handle whether it be call it stacking, double funding, basically funding within a certain period of time. I like to say within 7 to 14 days, someone, double funds right behind you. How do you treat that if one, you see it in statements, or two, a broker does that to a client that you funded with that broker and they turn around and fund someone the next, day or two?
Look, for us, it's all about communication. We have done co-fundings, which we look at differently as a double funding, where we just partner with another friendly lender and fund a customer more money than we're willing to take on. We have done that. We do that for our partners. Double funding, and as far as if somebody takes us and then brings on other positions immediately without us knowing, is grounds for immediate termination under our ISO agreement. It's not something we like to do. Like I said, when we underwrite, we try to underwrite tailored exactly to what we feel the customer can handle. We try to be as responsible as possible under our guidelines. That might be wrong in terms of what the merchant can actually do, but that's just how we do things. So, giving a nod to us and then going along and bringing on additional debt that we weren't aware of is not something that we like. I don't think it's good for the industry in general, to be honest. If you're not delivering what the customer needs with an understood agreement between lenders, you could be putting customers in a bad spot, and that's not something that we want anybody to do intentionally.
Yeah.
That's just in general bad for the industry. So, stacking comes in all shapes and sizes. So we look at it and we assess the situation. We understand it as good as we can understand it. We don't say no to everybody, but we most certainly don't take on situations that we know are headed in the wrong direction.
Gotcha. Okay. Great questions, everyone. With that, I'll start to kind of wrap it up. I will say for anyone that's local, I'll toot my own Funder Intel's horn here. We're having a mixer in Fort Lauderdale, February 22nd at a place called Bar Rita. And again, in Fort Lauderdale from 6 to 8 p.m. Everyone's invited. Tickets are on the website. You can go to the events tab. Obviously, another event is the Funders Forum Broker Expo at the Hard Rock, March 5th through 7th. It's the evening of the 5th. And then wraps up the morning of the 7th. Great event, new location this year. It's been really, really good the last couple of years after the pandemic. So looking forward to that. Andrew, I'll see you there. Andrew, thanks so much for doing this podcast. We appreciate you. Thanks to the Revenue-Based Financing Coalition again. They're sponsoring this video. Andrew, I'll get you out of here if no one else had any questions. And we'll talk soon.
Thank you so much, everybody. It's been a pleasure. We'll see you soon.